Insightful value here, your shortcut to clarity when stocks plunge. Today, we're zooming in on Canadian Apartment Properties, Real Estate Investment Trust, or CAPREIT. The stock price is low, so is this a value snapshot or a market misstep? This review is for informational and educational purposes only, not financial advice. If simplified investing insights, without the noise, are your jam, subscribe, like the video, and share your view in the comments. CAPREIT is Canada's largest publicly traded residential landlord, owning tens of thousands of apartments and townhomes across Canada, the Netherlands, and Ireland. From a value angle, this is a cash-generating, recession-resistant business with rental income tied to stable demand. Here's what's happening now. Revenue fell about 8% year-over-year in Q2 2025. Same property net operating income, however, rose roughly 5%, and margins improved, showing resiliency despite broader pressures. Distributable funds from operations per unit ticked higher for the quarter, thanks in part to share buybacks under its issuer bid program. Occupancy remains robust, around 98% in Canada, while rental rents grew over 3.8% on renewals. Dividends have stayed steady, with the latest monthly payout around 129 Canadian cents per unit, delivering a yield just under 3.7%. CAPREIT continues returning capital while balancing funding for growth, with acquisitions adding new properties and managed dispositions streamlining the portfolio. Why is the stock down now? The drop reflects investor anxiety over higher interest rates, cooling rental growth, and rising vacancy concerns. Some analyst ratings have shifted from buy to hold, even as price targets suggest potential upside. Debt leverage remains significant. Debt to equity around 76%, adding sensitivity to rising rates. Still, if you believe in Canada's long-term housing needs and CAPREIT's ability to manage through inflation and rate cycles, this pullback may offer value. But cautious investors should consider macro risks like economic slowdown, regulatory changes on rent controls, or mortgage affordability that may pressure occupancy or cash flow. If you'd like us to review a company you're curious about, we charge just $20 per review. Drop us a line at info@insightfulvalue.com. At Insightful Value, we break down core financials and make undervalued opportunities easy to understand. More on CAPREIT and other hidden gems at insightfulvalue.com. Thanks for watching. Subscribe, like, and head to insightfulvalue.com for investing made simple.